I'm Eric Lipsy, and this is Galt University. Today, I'm here with Austrian economist Joshua Thompson. How are you today?
Doing well. How about yourself?
Outstanding. I wanted to have you on today because I wanted to talk a bit about the price of gold, where it is right now, where it's going, and why it's going. Because I think people need to understand a bit about how the economy works and how gold is affected by the movement in the stock market, the movement in the dollar. And I know you're well versed in those things. So I'm happy to have you on to have this discussion today.
Well, thanks. I'm teaching myself, but I've been doing it for a long time.
Yeah, well, you've done a great job. You've helped me make some money anyway. So, well, let's start maybe by talking about where gold is right now and why it's there.
Okay. Big picture, gold is about 10% below its all-time high, around 2100. Um, it peaked in 2011 after the Great Financial Crisis, and then had a 5-year bear market into 2015. And then as the monetary stimulus just continued and continued for 14 years. And then it started rising pretty quickly in 2019. And then we had the 2020 crash that uh, got a huge amount of, or triggered a huge amount of stimulus into the economy from the both the Federal Reserve and the government spending. And then we really saw gold take off from that low, and then it actually made an all-time high in 2021 in August, around $2,100. And
Mhm.
then it's kind of just been tapering off since then, as the government and the Federal Reserve have slowed down their spending and reduced their assets. And yeah, so we recently had a very brutal sell-off over the last few months, and then just since September, gold rallied about 300, maybe $350, and
Mhm.
so it's settling now in the 1840s, and we're kind of just waiting to see where it's going to go.
All right.
Yeah.
Now you mentioned that gold it was basically a bear market back from 2011 to 2015. Can you tell us why that was?
Well, cats running all around. So I mean, every market's kind of fluctuating up and down, and realistically, the price just went up way too fast and had to settle down. And at the same time, we had uh, a huge amount of monetary stimulus coming into the markets. And what that did is, from my understanding, it just drove a lot of money into the Nasdaq and the S&P 500. I think the Nasdaq was up something like 14x from its 2009 low.
Crazy.
And when when you see a lot of money going into one market, a lot of people love to hop on that train. So it just kind of lost all of its love.
Yes.
And then
And that would make sense too, because of it gold had gone up so much, like you said, in the stock market had been beaten down so bad from the recession that it was just kind of overdue in both directions, I guess.
yeah, but I mean, but then in 2016, I think right before we had Trump elected, gold just shot out of the basement there. And I actually got my parents into some gold investments at around 1150. So about $100 off the low, which I think is going to be the lowest gold price we see for the rest of our lives.
Mhm.
And as it started to take off, there's all sorts of monetary problems going down. There's markets going haywire. I think the markets were really crashing and whipsawing in 2015 through 2016. And then 2018, we saw Trump reduce the corporate debt or corporate taxes. And so we saw another surge of investments going into the NASDAQ and the stock markets. And
Mhm.
so we saw gold dip a little bit. Um, and yeah, and then since then it's been kind of monetary chaos, wars brewing kind of all around the world. So it's been pretty strong since around 2019.
Now
Yeah.
you mentioned that that we've probably seen the lowest gold price that we're going to see. for a long time. Well, you might say period, but why do you feel that? Or why do you
Well,
see that?
gold is priced in US dollars, and US dollars are getting printed at an exponential rate. If you look at the debt in the United States and the monetary base, they were kind of growing at a steady rate. And then in
Yes.
1971, we went off we weren't really on a gold standard because they were probably just selling all the gold
Right.
on the market. But we officially went off the gold standard in 1971. And from that time, you can see the debt goes exponential, the monetary base goes exponential, and the gold price just rocketed
Yes.
from $35 an ounce to 850 in about 9 years. And it's just accelerating today. And it's not like we're ever going to take dollars out of this economy. Like, everyone's terrified of deflation since the 1930s. So until the debt and all the monetary systems collapse, the gold is just going to continue to rise with, the expansion of the currencies.
Mhm. Just because around the world, I know some people thought crypto would basically take the place of gold, but it seems like gold is still viewed as a safe haven for the most part. Gold is still viewed as that place you want to be when crap hits the fan, I'll say.
Yeah, crypto is an interesting case, and I guess when you look at what is money, you can't say crypto is money, because money is, one of the definitions of money is that it's fungible, which means you can use it for transactions, you can use it for taxes, you can use it in the economy, and in that same way, gold doesn't really qualify as money either,
Mhm.
because you
Right.
can't use that in transactions. But there's new technologies, and I kind of see, I think one of the coolest things is the gold backed crypto programs. And our company actually just released a report on those. But that would essentially be gold held in vaults around the world. And then when you exchange, you own like a crypto token that's representative of the gold that you own. And
Hmm.
so when you buy something with that crypto, with another, maybe a vendor or a person that uses the same program, it would legally transfer that gold to their account
Hmm.
via the transfer of the crypto ownership.
Well, I
Similar
guess that's
to
all. It's
similar to
almost
the
like
way
going back on
NFTs
the.
work. What was that?
Oh, I would say that that's almost like going back on the gold standard if you
I
think about it,
love it.
because the crypt if it's backed by gold, right? It's based on the gold holdings.
Yeah, I highly doubt we'll see any governments go towards a gold standard.
No, absolutely not. Yeah, it's too
It's,
limiting.
yeah, you can't get away with with everything you want to spend money on.
Right. Yeah, which is why they brought us off of it to begin with, right? I mean, it's like
Yeah.
you can print an infinitum, just keep it going and going and going. And I remember I was listening to a different economist, and he was telling me how the price of the dollar, well, where the dollar is right now, how you can basically, things that cost you 25 cents 20 years ago cost you $2.50. He's like, don't look at that as the value going up. Look at that as the dollar being worth that much less, that now it requires $2.50 to pay for the same thing that you would have paid for 20 years ago with only 25 cents. So
Yeah, exactly. And if you look at gold, I think if you I think the salary of a Roman centurion, like a captain in the military, was around 50 gold pieces, and 50 gold ounces today would be about $100,000, about the same salary, 100, 200,000. Like, you're looking at price stability over thousands of years.
wow.
And a lot of people have used um, the comparison that 1 ounce of gold will cost about the same as a really nice suit. So if you went to Armani and you got a really nice suit for a wedding, you're looking
Yeah.
at about 1,800 to three, four, $5,000, and that's kind of in the range where we think gold is going to be.
Oh wow. Yeah, I know I have heard that said that gold, I've heard a few analysts say gold between 3,000 and 5,000 per ounce. That seems astronomical based on where it is right now. But stranger things have happened. I mean, look at Tesla. Of course, everybody felt it was overvalued, and the price finally came down some. But look at how much their value. Well, I won't say their value. their, the dollar amount per share jumped. By that amount. So who's to say if things got bad enough to where people were really looking for a safe haven that gold couldn't skyrocket to be 3 to 5,000.
I mean, that's there's something to understand about gold is that yes, there's new supply coming onto the market at around 1 to 2% per year. But it's minuscule compared to the amount that already exists in the world. So it doesn't trade like like copper, where the month to month supplies can really fluctuate and the price can swing volatile like all over the place. Gold is more, it's a matter of preference, right? So it's not like the gold itself is changing, or even the dollars are changing. Yeah, we know that there's an increase in the number of dollars being created. But when it comes down to it, it's like, what would people rather own? Would they rather own dollars, or would they rather own, gold? And
Right.
you get these periods of economic chaos and crisis where, you want to maintain your wealth. And so you go to gold, and you can look at the ratio of the price of gold to housing, the ratio of price of gold to the Dow. You can look at all these ratios. And I mean, I think in 1980, gold and the Dow got to a 1-to-1 ratio. And in 2011, I can't actually remember, maybe 7, 8, 9 or something like that. But right now it's at 18 to 22 or something like that. So on a comparison basis, it's pretty cheap, which tells me that even though the price has gone up, almost doubled since 2015, the public really hasn't gotten into it yet, as much as the amount of money that's flown into the Dow and then especially the NASDAQ. It's just, it's a very large imbalance.
Oh, great. Well, that's definitely gotten us, thanks for sharing all of that. That's definitely gotten us kind of up to speed to what's
Yeah.
going on and what has been happening in the area of gold. And I know one of the things we wanted to definitely talk about to provide some kind of guidance is, because you kind of said where gold could be going. I mean, 3 to 5,000 an ounce, that's astronomical. At least it seems so right now. What gold, so that people aren't necessarily going out there and just throwing darts blindly, trying to pick the right miner or the right gold stock or ETF to be in, where would you recommend? And granted, I'll give this disclaimer, he's not your financial advisor, so you
Yeah.
do your own research, all of that good stuff. But what are some of the areas we should probably take a look at and do our own research on to see where we should possibly be putting money for future growth?
Well, I will say that, as much as I expect gold to go up, there is always the possibility that, I don't know, maybe a Republican led caucus takes control of our government and says, we're going to balance the budget and we're going to pay down debt, and we're going to, stop all these conflicts around the world and be what America should be. I think that's unlikely, but it is still a possibility. And in that scenario, you're going to want to own dollars. And I could see the dollar going up, but I could see asset values of almost everything. It could be, massive deflationary event. I don't think it's likely, but it could happen. I'm kind of just playing this as we're just going to keep kicking the can down the road until everything kind of breaks. And so with that, there's kind of two reasons to own gold. One, I own metals because in the event of a total economic collapse, you'll be able to buy houses for an ounce of gold. I mean, in the 1930s Germany, you could buy, I think, like a penthouse suite in Berlin for 3-4 ounces of gold. It's like mind blowing. You could also have electrical problems. There could be a solar flare from the sun that cuts electrical communications, and then all of our digital money's gone. And what do you have? We're immediately back to a barter system, and I don't think these are likely, but it helps you sleep at night to have a little bit just stashed away, buried in
Yeah.
the backyard.
Yeah,
So
they
that's
just have a plan for everything, you have a plan
yeah,
for the good times, the rough times, and the really, really bad times. You just have a plan in place.
yeah.
Have resources in place, yeah,
You don't need to hoard it,
right.
but it's nice to know that I got something I can trade for bread. you know?
Absolutely. Food, water, and shelter are necessities, right?
Yeah. And then as far as investing in metals, there's so many options. It's hard to narrow them all down, but you can own gold or silver at your home. You can own it through vaults in the United States and around the world, or held at national mints. I know the Austrian Perth Mint, you can hold gold there, and it's kind of like a digital gold, like the cryptocurrencies. Um, I think, yeah, I have some in Utah and some in Singapore. I think my family might have some in Switzerland. So you can hold it, physically at a vault, but you're going to have to pay every quarter for that storage fee. And that's not ideal, but it's just part of the game. You can also buy physical gold through some of the physical trusts on the stock market. So the Sprott Physical Trust is one that I trust. It's hard, like GLD and
Mhm,
SLV are these popular ETFs.
mhm,
Both of them are owned and managed by banks. Like I think JP Morgan manages SLV, and
mhm.
who is it? Maybe HSBC managed GLD. I don't know. I don't trust those banks. I wouldn't trust them
Yeah,
with anything. So I don't like those. But the Sprott guys, they seem to have their heads on straight, and they're invested in the game. So I think those trusts are trustworthy.
yes. Yeah,
Um,
it's definitely makes it hard to trust banks with all the things they've done over history.
yeah.
So, yeah.
And when it comes to buying something like that, you just have to be aware of the premiums, because everyone who's buying or selling, the intermediaries, they're making a business out of it. And
Mhm,
they're going to try to buy gold below the price, and they're going to try to
mhm,
sell it above it. So, always shop around. And if you're trying to get a lot, then you just buy. I think you should just get the biggest bars you can: 10 ounce, 100 ounce, 1,000 ounce, whatever. Versus just a lot of people are going to buy maybe their national mint, like a gold eagle or a silver eagle. And I'm not saying don't buy those. I think they're awesome. I own some, but you're going to pay a premium for it.
mhm.
Now, ideally, in a crisis or in a commodities bull market, we'll be able to sell at such a high price, those premiums we won't really care about anymore. Like in the 70s, gold went from 35 to 850. That would be a gold price of around, I don't know, $30,000. It'd be insane. I
Wow.
wouldn't really care about paying an extra 2%
Right.
when I bought it.
Right. It wouldn't matter at all at that point.
Yeah. But just generally, I would say stick with either national mints, like Canadian Maple Leafs, US Eagles, Austrian Philharmonics, and Australian, what do they have? Kangaroos, I think. But stick with those national mints and stick with big bars.
Right.
There's so much diversity out there, but just don't overpay.
Yes, absolutely. I completely agree with that. Completely
Yeah,
agree. Don't overpay because paying
don't
too much,
overpay,
just
because there's plenty of
you're starting in the red just out the gate. So,
yeah,
yeah.
yeah.
Now, Sprock, you mentioned it. Is it SPROC? Is that
SPROTT.
TT? Oh,
Eric's
Sprock. Okay.
Eric Sprott is a big investor in the resource space. He owns a large percentage of most gold and silver stocks in Canada and the US and around the world. His company has made physical trust ETFs. They've made silver miner ETFs, gold miner ETFs, uranium ETFs.
Mm,
Yeah, all sorts of good investment products.
Now, if I was looking for the ETFs, under now Sprott isn't an ETF itself. I'd be looking for something I look up Sprott and then find the ETFs that are under their name.
Yeah, yeah.
Okay.
Those are all based out of Vancouver, but I think they're listed in the US as well.
Okay.
Yeah.
Now there is a lot of talk. There's a lot of fear, anyways, between some people. Some people just kind of have their heads buried in the sand, just hoping everything is going to be just fine, and they don't have to prepare or be concerned about what's happening in the economy. But as far as people who are concerned and want to be, so maybe is this outlook for gold based on where we think the economy is going? Like basically, there's going to be a recession. Most of the data I'm looking at anyway suggests that a recession is either already here or definitely on its way.
Yeah. Um, I mean, they keep changing the definition of recession, which is
Right.
convenient.
Yeah, that helps no one.
But but yeah, I mean, if you study the Austrian business cycle theory, it seems very, 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 very unlikely that we won't have a recession and a
Mhm,
stock market crash and
mhm,
a spike in unemployment and a lot of bankruptcies. It just, I mean, that's the business cycle that interest rate manipulation causes.
mhm.
Um, can
That's
explain how that works.
mhm,
But in that scenario, assuming we get real deflation where asset prices go down and the dollar goes up, we've only had a few moments of that in the entire US history. The 1930s, I think a little bit in the 1969, 59, um, maybe briefly in 1989 for like a few months, and then a couple months in 2008. And I mean, we had a couple months of deflation in 2008, and the whole world almost ended.
yes.
Because it's different when you have deflation in a system with massive amounts of debt versus
Mhm,
deflation in a system that doesn't really have a lot of debt. So
right.
we're kind of looking at a very complicated situation where any amount of deflation could lead to a kind of like a chain reaction of defaults on debt.
Mhm,
And the biggest risk that we've been talking about in our circles right now is the risk of government debt default,
mhm.
because we're just constantly printing money, inflation is going up, and there's been a severe underinvestment in commodities and resource production, and an overinvestment in like services and consumer goods. And so you're seeing inflation pick up, and when inflation goes up, bond holders, they don't want to hold bonds, so
Mhm.
they're going to sell bonds, because why would you hold a bond yielding 2, 3, even 4% when inflation's at 8%?
Yes.
You just wouldn't. Um, and so the Fed isn't moving interest rates. The Fed is following the bond market.
Mhm,
That's a really important thing to understand. Um, so, and I should start at the beginning of what causes all this. But essentially, as inflation goes up, the yields are going to go up, and I've done. You can look at all the different U.S. Treasury yields and how much debt we have, and you can calculate what our interest payment will be on that. I think in 2021, our interest payment at 0% rates was around 300 billion. Last year, around average of like 2.7 to 3.5% rates at about 600 billion. So if rates keep going up to, let's say, 6%, we're looking at 800 billion in interest payments. And, you know, in the 1980s, to cool the inflation, they had to let rates go to 18%. That would be more than our entire tax revenue. So it's really a mathematically unsustainable situation if rates go much higher.
yes.
Either they have to cut spending or they have to increase taxes. And doing that when inflation is running hot is not a popular thing to do.
Yeah. I think we're basically in uncharted territory, and the Fed will keep doing whatever they think is they need to do until the system breaks, as you mentioned earlier. And then we'll just have to. The thing is like if you see it coming, you just prepare for it. That's really all. That's really all you can do is like you said, just put the necessary things in place to make sure you're going to be okay. You know, have your plan when things are good, the plan when things are bad, and the plan when things are really bad, because it's happened before, and it could certainly happen again. But I do want to have a part two of this. Maybe we could have you back on to talk about debt and inflation. So we could have that conversation because I know that could be a whole nother
Yeah.
a bowl of wax. We could have a whole topic just on the debt and inflation thing and where we are currently in this economy, not just the government, but personal debt, credit card debt, everything. So yeah, so I would love to have you back on and we can dive into that as well. But I think you've given us some really great nuggets as far as like what to be looking at for gold and how it tends to move and why gold might be it should be the place to be, not later but now while the price is down a little bit. So yeah.
Yeah. I mean, financial advisors used to advise like 3 to 10% of your net worth in gold up
Mhm.
until around 1971. And then mysteriously, that's not recommended anymore. Um, but that was the norm. And
Yeah.
that if you back test it, it smooths out your investment portfolio over the long run. And I mean, look at the Nasdaq from 2000 until 2019, it went flat, while gold went from 250 to it 10x.
Yeah.
So there's different times. There's times when you want to be in the stock markets and equities, and there's times when you want to be in safe assets. And
Yes.
ultimately, um, when valuations don't make sense, being in gold is like taking your chips off the table and waiting for things to make sense again,
Yes.
you know?
Yeah.
Because the valuations, they don't make sense right now. And with
Right.
inflation going up, the debt that individuals and companies and governments have, I mean, it just it is not really math I would want to bet on. So I just consider it just taking your money off the table and waiting for things to calm down.
Yes. And I think that's wise advice. Just based on every, like you said, you look at the stock market, these companies came out with Apple even saying that they were 5%, their income's down 5%. First time that's happened since 2018. Do you think the stock went down? Nope. It went up. And it was
Yeah.
like you said, nothing makes any sense right now. And I always have this thing. I know it's kind of taboo to use the word manipulation in the stock market, but I always have this thing that whenever things just don't make any sense, there's probably some manipulation going on somewhere. when
Yeah. I mean, it's
when
just
it just doesn't
confusion.
add up.
It's just confusion because when you manipulate the interest rates, it breaks the incentive structures. And so people think up is down. You know, you come out with this great job numbers and the
Yeah.
stock market crashes because they're going to raise interest rates or something. But then you actually read the job number and it's terrible. They've
Yeah.
just seasonally adjusted it. So you're like, what are people even investing based on? Like the data's fake,
Yeah.
the data's manipulated, the incentives are manipulated. It just nothing. Yeah.
Yeah.
So it's smart to have at least a little bit of your money in something that has been around for all of recorded human history.
Yes. Well, my bet is that most people aren't reading the data. Most people are just seeing headlines in the news and things like that. And there's so much conflicting information out there right now that it is just, mind blowing that it's even allowed because it's like somebody's lying. It can't, they're like, oh, the American consumer is strong. And then it's like, oh, the American consumer has more credit card debt than they ever have in history. So you're not strong if your credit card debt is you're maxing out credit cards and defaulting on credit cards. That's not a sign of strength. That's a sign of weakness. But like I said, we could get into that on the
All
next one
day,
because
all day.
this is a very that's a whole nother episode. So, but thank you very much for coming on. Is there anything else you wanted to share with the people before we go?
Nope, only that you're welcome to message me. I have saved a lot of people a lot of money by just having a look at some of the stocks that they're investing in and pointing out that, hey, their revenue's down, their net earnings down, their liabilities are up, their cash is down. Like nothing's good about this. So I'm happy to help people kind of self-audit their things. And
How can
then
they find you or follow you?
yeah, so let's see here. Well, I guess can email me at strategyresource@gmail.com.
Okay.
And then also I work as an equity analyst for the Dollar Vigilante, and we're an alternative news and an alternative economics resource where we cover topics and discuss ideas that you're not allowed to discuss in mainstream media. And I mostly cover resource stocks there and do daily research on all the economic trends and all of the kind of gold, silver, uranium, lithium, platinum, palladium, all those stocks we cover. So yeah, check that out and feel free to message me.
Sounds great. Well, thank you again for coming on with us today, Joshua. We appreciate it. We appreciate all the golden nuggets you dropped for us, and we look forward to having you on again.
Thank you, sir. Look forward to it.